Deven Choksey is with us, Managing Director at DRChoksey Finserv. Deven, good to have you with us here. Thank you very much for joining us. What kind of activity at your desks have you been seeing on Grow, if you've kind of seen any kind of activity? Money Control put that story out that a lot of people tried to short it initially as soon as it listed because it had run up in cash. I guess couldn't cover during the day, and then those shares have gone into auction. So maybe that also perhaps responsible for some amount of short squeeze. Float, of course, is limited in any case. But just your thoughts here, Deven.
Yes, Prashant. Good morning. I think largely due to what you explained, I think technical reasons, for which the stock price is on fire. Some of the funds definitely, are keeping a good amount of space for adding some of the consumer tech companies, fintech companies, ad tech companies within that. I think they try and create that particular portfolio for themselves. And that's the reason for which initial demand post-listing started coming in. To my mind, I think the valuation-wise, everything is in price. Even if you look at last year's profit, and even if we have to assume that I think this year it will be double from what it was last year, which is about 3,500 crore. On a market cap of around close to 110,000 crore, I think you're talking about already 3.25% kind of a yield, I think, that you get on this kind of a profit. So frankly, I believe that everything is in price. It's a costly affair right now at this point of time. Maybe short squeeze related issues, as the channel has reported, I believe that I think could possibly subside at some point of time. One will have to wait and see how the valuation plays fair. Then only I think one can look at such businesses from adding into the portfolio.
Okay, all right. Well, point well taken, Deven. And I think there is that float issue as well. You have a large amount, close to 59-60% is with institutions, promoters at around 28%. So you have 90% between them. And from the public holding as well, there is, some part of that, which is, again, you have the unclaimed shares, which are another 5.6%. So effectively, there is only 4 to 5% shares that are in the open market. So float is limited. That could be another factor at play. That said, let's talk about a few more companies then, Deven. KC. That could be the stock in focus because late last night at around 10 p.m., they put out on the exchanges that, they're not going to be able to, they're barred from new power grid projects for a span of around 9 months. Now, the current order book doesn't get impacted, but the street will be a little bit cautious because of this barring for the next 9 months with regard to power grid contracts. And back of the envelope calculations suggests that maybe, in fact, T&D is approximately 60% of their order book. And 50% of that is domestic. And a large part of the domestic part could be coming in from power grid. That's in the order book that is not affected. But this will be a sentimental hit. What would you do? Would you look to buy the stock if it opens up weak?
Good morning, Nigel. Well, not too sure immediately because we haven't done the impact analysis of, I think, how exactly is going to play out. And neither we have, I think, followed the sentiments at this point of time. So we'll probably wait before, I think, making any call or taking any call like this.
Okay. All right. Got that. Let's focus on a couple of other names then. Let's talk about the auto pack. Some of those auto ancillaries actually have started doing very, very well. I was looking at a chart of FIAM, that's done well. LG Balakrishna has done well. Beg your pardon on that one. You have Lumax as well, that's done very, very well. Madison, they came on the channel and they sounded very optimistic. Anything you like from the auto ancillaries pack?
Yes, I think this is the pack, I think, which probably would look relatively more stable going forward as well. Because on commercial vehicle side, also the new demand getting generated. On the passenger vehicle side, of course, I think with a higher amount of money in hands of people with a lower cost of interest, I think you're seeing a good demand coming in as well for passenger vehicles. And ancillaries are right in place. Some of the ancillaries which are basically also applying into the electric vehicle space, where probably I think either in the space, I think where ADAS is operated or where infotainment is operated, companies are coming out with the newer product lines, and that could possibly be a larger one. Because I think today in any vehicle, 45 to 55% kind of a value comes out of the electronics. And some of these companies like Minda Corp, Minda, those companies they have, I think, a significant amount of new product development in their R&D, which probably suggests that they are looking relatively good from the long-term perspective, of course, but I think in near term also, playing a very solid role with some of the OEMs. So we like few companies from investment perspective. The tailwind is very, very strong as far as this business is concerned.
Absolutely. Deven, any thoughts on LG Electronics with the recent listing? It's gone sideways post-listing. Two initiations with slightly higher price targets. I think this Morgan and one more. Any thoughts here?
So we love the company, the kind of distribution reach that they have created, the product line that they have, and the backward integration that they are putting in. Definitely suggests that the business is going to possibly produce better profit than before, and a sizably good one. But the fact remains that everything is in price. Today, the valuations are not suggesting that one should get immediately into it. Maybe post-listing, many companies, they find the institutional investors in order to fill up their books. They buy at a higher valuation. And that's where probably I think you're not getting them cheap. In my viewpoint, I think it's worth waiting for some time before adding a fresh into the portfolio. Not expecting, I think, major or sharp correction, but even if I think the market gives you a sideways some time correction, and with some price correction of around 10% or so, could be once again becoming a good case to add into the portfolio.
Okay, all right. Yesterday we saw a lot of large trades. Keynes Technology was down 5%. There was a lock-in that opened up. Motilal Oswal went ahead and sold. You had Paytm as well that was under some pressure because there was a large trade that took place out there. And Emphasis as well was another one. So, sometimes once these large trades get out of the way, the stock continues to move according to the fundamentals. Any of these three you like? All three of them were under pressure yesterday, whether it was Emphasis, whether it was, Paytm, or even Keynes Technology.
Not really, I think, Nigel, because as we see, most of the portfolios are getting reshuffled. Some of the tech companies which are mentioning, likes of Paytm, I think those companies are basically being shifted out of the portfolio by some of the fund investors and are getting into some of the other ones, like newly listed ones, like Grow and other stuff. So frankly, I think it's a portfolio shift which is happening. And as you rightly observed, I think the post-listing scenario now, when some of the market investor goes out, you see the earnings coming back onto the real terms, that is on the core strength of the fundamentals. Today, I think the market technicals are getting out of the way from as far as these companies are concerned. So as far as I think I am concerned, I think let the price acceleration take place in some of these counters, after which I think one can relatively look at them afresh as far as business is concerned. Business model may be good, but the valuation probably needs to come down to get rationalized. Then it is a better opportunity.
Deven, just two other sort of stocks, right? GMR Airports. There's Sudarshan was telling us that there is intersay kind of, not intersay, but basically transfer GQG's name showed up, but basically it's transferred from one fund to the other, one scheme to the other. So it's not fresh purchase in that sense. If you have any thoughts, stock was up sharply. GMR Airport over 100 rupees now. And if you looked at Piramal Finance, I mean, post the demerger, from 1250 to wherever it is now, 1600 plus. Any thoughts here? 1700 plus. Deven.
So I think in general, I think this particular business, airport business proposition becoming very, very strong. In fact, I think under the new Udan scheme also, I think some of the smaller airports also attracting large amount of traffic. I think that works very well. Likes of GMR and even Yada airports, I think they are basically following a significant large amount of passenger traffic and a cash flow generating model as far as I think the infrastructure play we want to consider that as. In my viewpoint, I think the companies are relatively good. Not too sure whether I think they're worthy adding into the portfolio immediately. But yes, GMR looks, I think, relatively more decent than what it used to be. More stable, rather, I would call it, now to add into the portfolio.
Yeah, no, absolutely. Deven, thank you very much for joining us. Good speaking with you. And it's a pleasure speaking with you, as always.